Good day, traders, and welcome back to another episode of Crypto Vibes with Walt. And today I'm going to talk a little bit about the Fed rate hike, the unemployment numbers, and how it can impact the US economy in the coming next few months. Then we'll look at the dollar index and how it's simply skyrocketing, and then we'll delve into some of the riskier assets. So hit that like button, subscribe to the channel so that you don't miss out on these frequent updates. Now the Fed raised the rates by 75 basis points, which now puts us in the range between 3.5 to 3 to 3.25% on the Fed funds rate, and it's the highest level that we've seen since the massive rate cuts which started back in 2008's financial crisis. Now, based on the expectations from the FOMC meeting, now rates are expected to hit around 4.4% by 2023, and they expect the unemployment, which is currently at 3.7%, they expect the unemployment to be 3.8% by end of year and a 4.4% by next year. They also expect the inflation to then fall down to about a 2.6 to a 3.5% by 2023. Now, talking about the unemployment and its correlation with the US recession, a recession usually occurs when there is a significant increase in the unemployment numbers. So a reversal in employment generally takes place at a much slower pace initially, before then accelerating throughout the recession. So the gray shaded areas are the time when the US economy was in a recession, and this is the unemployment rate. So as you can see, initially there was a slow increase in the unemployment, and then it aggressively skyrocketed higher. So the unemployment data suggests either we're not going to get a proper recession, or the big one is still ahead of us. Now the unemployment numbers, as you can see, is pretty stagnant, so maybe we'll see the unemployment really pick up pace in the next 3 to 4 months or so, which also then coincides with the Fed rate hike having its impact on the US economy, as there is generally around a 6 to 8% lag on effect between the Fed rate hikes and its impact on the US economy. So the Fed rate hike began around March 2022. So by January 2023, we should see the impact of the rate hikes that have been in place since earlier this year. Now, a robust employment also means that the demand remains elevated, and hence the Fed might need to engineer a recession in order to drag prices back down. As you can see, the dollar is skyrocketing because of a global shortage in the dollar. It is something that I've talked about multiple times on our previous episodes. The Fed is withdrawing liquidity from the markets, which is around 95 billion a month, and hence we see the dollar relentlessly rallying higher. Now, looking at some of the macro charts or the higher time frame charts, I don't really see a great deal of resistance before the dollar index reaches around 115 to 117 level. But ultimately, on the macro front, I think that the dollar is going for those 120 highs, because obviously there are a level of clean highs that we can see just around the 120 to 120 range. So I think on the long term, this is where the dollar is heading. Any retrace back down to this level is a plain and simple long towards the 120 level on the dollar index. And this is the monthly chart, by the way. Now again, on the weekly, the old range high perfectly coincides with the level of demand the fresh level of demand that's formed around the 109 region. So in case if the dollar rejects from the 115 to 117 resistance, which is, let me just, somewhere around this region. So if the dollar rejects from somewhere around this region, I expect this weekly demand to hold. I expect this weekly demand to hold and a continuation higher on the dollar index, which basically means that the risk assets haven't bottomed yet. Now I do expect S&P to kind of retest 3500 region somewhere around in the near future. Maybe a little bit lower to around the 3300 region, which was the high before the COVID crash happened. So I do expect price to tag around this region, but any reclaim of the 3500 region is a blanket long on S&P in my opinion. But obviously the macro factors would play a decisive role in when you can position yourself in the risk assets, because on the high time frame currently there is a bearish market structure which isn't really proposing a good buying opportunity as of yet. Again, as you can see on the daily chart as well, the the S&P is sort of breaking market structure and key level of supports. So this was the support that that price rallied off of before rejecting from this weekly level of resistance. And again, all these levels have been covered in my previous episodes, and you can see the reactions off of these levels. All of this was covered, and price pretty much followed the plan just like we expected it to. So this was a range low. I think if price manages to get back above next week, then I can see that we can probably expect S&P to rally somewhere around 3800 region, and that is a place where a macro top could form before breaking down further. Now this is the weekly Bitcoin chart, and something that I noticed that there's always been like a 3-leg down each time we've been in a bear market. As you can see over here, there was the first leg down, price rallied higher, then an aggressive leg down before price consolidating and forming a bottom. Same thing happened over here, price rallied down, sold off, rallied higher, sold off again, consolidated after rallying, and then the third leg down. Similar to here, sell off, rally, sell off, rally, and then again a sell off, forming a bottom on Bitcoin. Now we've had this first initial sell off, price rallied higher, then the second sell off. Now is this the rally that begins that aggressive sell off down towards the high time frame region of around 9 to 10,000, which I've obviously covered week in and week out, that this is a place where I expect price to bottom out. Is this just the consolidation that then leads to the breakout and the fresh level of weekly demand being tapped? Is what you should be asking yourself right now. Now I know that I've also covered this on the previous episodes, but this is something for the folks who are watching it for the first time. Now every time we've formed a bottom, price has almost come down and retested the consolidation before the inception of another leg higher. First time it happened over here, second time it happened over here, and third time again in the consolidation that led to this aggressive expansion was retested. Now clearly this is that consolidation that led to new all-time highs on the Bitcoin. So again, the probability of this being a macro bottom, this range being a macro bottom once price breaks down from this level, is substantially higher, and obviously because of the reasons that I've just explained. Now there is also a possibility that we might not retest this region, the 10,000 to 9,000 region, which is simply because considering what the Fed has been doing, that they've been tightening the economy for around 7 months now. And so if we see the inflation slide, and the Fed might pivot, they might stop the quantitative tightening, implement the quantitative easing once they see that the inflation is constantly controlled. So somewhere around the Q1, Q2, 23, if the inflation is controlled, price might just simply consolidate at this level, move higher, retest resistance, move back down. Simple consolidation for a long period of time, and then we could see the buyers step in and the rallies higher in risk assets once Fed decides that they're done with tightening the economy further. But the idea is pretty clear. A lot of it depends on the global macro situations and obviously the geopolitical events occurring between Russia and Ukraine and its effect on demand. So demand and prices, by the way. So now on the daily, we are at the 5th test of support, and clearly the 5th test isn't really the best test. So maybe we get a rally from here early next week, somewhere around possibly this region. So maybe we see a rally somewhere around here, and obviously we have an untested high. Sweep that high, get back below. This forms a deviation, and then we see that aggressive sell-off. And it's very evident that after all these touches, if we do get that rally higher and price manages to come back down, that this test or this level of support won't hold. So the probability of this breaking on the next touch is substantially higher. So get that rally, sweep these highs straight into a level of resistance or untested supply, and then get back below, and then the aggressive sell-off should follow. So in my opinion, this move higher would be the decisive factor in what Bitcoin's price action is in the next few weeks, because reclaim this and then we could possibly target either this level and then this level. But for now, this is a very important level of resistance. So this is what I'm watching on the daily on Bitcoin. Again, the daily is also in confluence with the H4 resistance or the consolidation that broke market structure down towards the downside, retested it, another aggressive sell-off straight from that level. If price manages to get back somewhere around this region, that's a very clear opportunity to fade the rally. Moving on to Ethereum now. Now on Ethereum, you can clearly see the bearish market structure it's been in, right? High, low, lower high, and broke this low, forming a bearish market structure. Now this is a key level of a pivot level of support on Ethereum. So the moment price breaks below this, I think that there's a very high probability that the 1100 region of support gets tested on the weekly. So this is forming low. So any retrace back higher, which is in sync with the Bitcoin rally into resistance, clean these lows straight into a level of demand, reclaim it, and then we can target higher prices. But for now, looking at the market structure and the level of the level of support that it's broken, I'm not really too keen on buying Ethereum as of now. The daily obviously presents a much clearer picture. If you see, it has broken below range low and now retesting resistance, which is again confluence with your daily level of supply as well. So an old range low, the weekly level of resistance, and then a daily level of resistance is where price is at. So obviously this is not a place that I would be interested to buy unless price manages to reclaim this level convincingly. Then obviously we can target higher prices. But for now, I think that this is just an underside retest, and we will see that aggressive, that another leg down towards the 1100 region on Ethereum. So pretty simple game plan on Ethereum as well. Reclaim old range low. It's a long towards mid range. Currently, it's at a multi-time frame confluence level of resistance. So not too keen on going long as of yet on Ethereum. Now remember guys that being patient is very hard in crypto because crypto moves at 100 miles an hour, but sometimes you have to remember that bear market plays out over many months rather than just a few weeks. So just like I talked about on Bitcoin, maybe we won't see that that retest of the 10,000 level region, and maybe price would just gyrate between these levels into Q1 2023, where the Fed pivots, and then we see the Bitcoin rally higher. So all this range might just be a consolidation or a reaccumulation before price breaks market structure and then rally higher. Now we will obviously get a lot of opportunities to get long and position ourselves in the macro move heading towards the 2024 Bitcoin halving. But for now, till the time Fed is trying to destroy demand and curb inflation, I won't be positioning myself in macro swings for now. So this is all for today's episode. I hope you guys found this insightful, and if you did, hit that like button and subscribe to the channel, and I will talk to you guys soon. Cheers.